All right, everybody, welcome back. So I wanted to explain this indicator a little bit. I thought, just making a video of it would be just as good as writing a blog post. So let's do that, all right? It's a very simple thing, white line. I'm gonna I'm gonna need to zoom in a little bit. Okay, so it's always a little weird to zoom in, right? We kind of lose track of what we're seeing in the rest of the market, but I need to zoom in so that you can better grasp what's happening with the indicator. All right, so uh, I'm going to choose a few different places. So with what we got here, what this indicator is doing is it's marking 50% of the previous bar's range. We'll call that a quick stop, right? To demonstrate this, I'm going to get the line tool out and snap a line here on the quadrant line. We'll just turn all of these other lines off. What I saved, what I didn't turn off, is the 50% mark. All right. So we've got the high of this bar marked. We've got the low of this bar marked. They're just hidden for the moment. And then we've got the middle of that bar marked. Okay. Now, what my indicator does is it marks the middle of that bar in the next bar, in the current bar. So suppose we're looking at price. This current candle is the last candle. It closes, a new candle opens, and what we get is a line right there. So what you would see is that line, right? Let's move those ticks out of the way. You would see that new candle open right there, and you'd see a line over price. So what's the line for? Well, one thing that I like to do when I'm trying to get into a trade is I let that current candle close and let the new candle open, and I try to catch some of this wick. So the reason behind that is when we get a swing high, what we will generally get on the way down are these wicks. Okay. And those wicks, just like how we had a swing high here and we were headed to the downside, nearly every one of these candles has a wick on it. Right now, sometimes you're going to get a bearish Marbozu or something like that, and there's no wick underneath it, whatever. You're going to get that. It doesn't owe you a wick, but most of the time you're going to get some wick. And the logic behind this is, you know how they always say, wait for candle close and then get in. Wait for candle close and then get in. We hear it all the time. Wait for the candle to close and then get in. My argument is, why would you want to get in as soon as the new candle opens? Wait for the current candle to close if you're trading a pattern, right? Because the pattern isn't valid until the candle closes. So say we're trading a 2-bar reversal and we're waiting on that candle to close, because until it closes, the 2-bar reversal isn't valid. And then it does close. That's when they say get in, right? Wait for candle to close and then get in. I argue, why would you do that? Why not wait for the wick? Of course, you're going to say, but Sig, what if there's no wick and it just falls away without you? Okay, I mean, hey, it does happen, right? Trust me, it does happen. But, and this is the but has a lot of weight to it. But one, how big are you trading? Two, how far are you expecting to hold the trade? Because if you're the kind of trader who's getting out in 3 to 6, maybe 10 ticks, you're not going to be in it for very long anyways, and you're probably going to have multiple chances to trade, say, a move that looks like that right in front of us. It went from 9:50 in the morning until 10:10 in the morning. Okay, that was a 20-minute move. How many times do you think you would have tried to trade that if you were trying to trade it? Right? What, two, three, four times? Because you would have gotten in, made a run, got out, gotten in, made a run, got out. That's not necessarily how I trade. It's just how I see a lot of people trading. So if you're doing that kind of trading anyways, if you can shave off two, three, four ticks, maybe maybe a point and a few ticks, wouldn't you want to do that? And what happens if you don't get a trade because it never pulled back to let you in? Well, you can still get in, right? There's nobody saying that you can't. One of the defining characteristics that I use when I'm trying to decide if I should get in or not, if I don't get a wick right away, is if we break down below the previous bar's low. So for an example, say this bar closed. Well, you know what? That's not a good example because we have a good wick there. Let's say this bar closed. The new bar opens. I'm waiting for a wick somewhere near or up there. We get just a tiny little bit of wick and it begins to fall and it breaks the previous bar's low. A lot of times I'm willing to get in right there. I don't get in my whole position there. I'll get in with some. And the reason I do some is because once I get in, if it comes back up to where it opened, or if it comes up to the current candle's high and then crosses back down through the open again, I'm usually willing to get in right there too. I'm willing to do that. So, I would already be in here. I added some there. That brings my break even somewhere through the middle of that, right? You kind of get the idea. And if I do add in that way, I generally will discount this now and I will use the current bar's high, or I will put my stop underneath that 50%. And I'll be watching the dome through the whole thing too, right? I don't, if there's a big order to hide behind on the dome, I will certainly get closer and hide behind that big order. So just the indicator that I made here is very simplistic, right? All it's doing is drawing that line for us. We still have to negotiate our own trade, right? How we're going to use that line to our advantage. But I got to tell you, what was frustrating is constantly drawing that box to see the 50% line, or, you know, really just not being able to spot 50%. I would see price kind of pulling back up. Here's a perfect example. I'd see price pulling back up and I'm not able to gauge sometimes just with the eyes, is that 50% or not? And so if I couldn't do it with my eyes, I'd have to get the drawing tool out. It just kind of got frustrating. So why not have an indicator draw the line for us? It's just perfect sense. And there you go. That's what we have. So that's it. I'm going to put this indicator's share link in the description, and you'll be able to just import it into your Thinkorswim just like that. So that's what I got for you guys. I appreciate your time, and I'll see you at the next video.